Bank stocks pulling back a bit today after what has been a recent surge. The KBW Bank Index touched a yearly high yesterday. It's up about 75% over the last 12 months. Let's bring in Tom Michaud. He's CEO of KBW. That's a Stifel company. Tom, always good to have you. You've been positive. You've been right. I pointed that out a number of times. You know, how much of your current case is predicated on the yield curve continuing to steepen?
Well, first of all, good morning and great to be with you again. Well, let me tell you how we got here. We got here because the credit impairment story did not happen. And we got here for precisely what you just said, is that we have a steeper yield curve, we have higher rates, and that's helped the bank stocks rebound. When you look at the bank stocks today, we are only in line with historical averages and where they were pre-COVID. Even though the stocks have had the big move that you just mentioned, they're not at egregious or highly valued levels. So, you know, our opinion is that what you need to have happen now is you'll have the bank earnings need to accelerate as economic activity continues to build. And we think that the bank stocks are a good place to be if inflation concerns continue to grow and we do get higher rates or a steeper curve.
All right. And you do expect economic activity to increase, I would assume, and then you therefore expect it to be reflected in the results that we're going to see from the banks?
That's right. So we've had there hasn't been a lot of revenue growth outside of the big investment banks with regards to core banking activity, but we're looking for the early signs. So we recently have had several bank conferences in some of the states where they reopened earlier. So, for example, we just did a Texas virtual field trip. The Texas banks are talking about accelerating growth. We're hearing about that in parts of the Southeast. We think that now that as all these states have opened up, you're going to see loan growth and economic activity continue to build. And we think that's going to be a positive for bank earnings going forward. And so what we have in our models is we have a reemergence of loan growth in the fourth quarter. Personally, I don't believe that that's the key driver for bank stocks because I think it's a matter of when, not if. You will see this loan growth begin to pick up. And what's also different this time is that bank balance sheets have a record amount of liquidity on them. So when rates do start to go up, we expect net interest margins to widen, and we think that's going to have a really bullish impact on earnings per share.
Tom, somewhat bigger picture, if we look at how the various fintech companies, payment companies are valued in the stock market, you know, Square and PayPal together, not much smaller than JP Morgan market cap wise right now. What's implicit in that in terms of how much of the bank's traditional business gets eaten or challenged? And what are your bank clients doing, if anything, to try and, forestall that, positioned against it?
Well, so first of all, I think this is going to be one of the most exciting stories to talk about the next couple of years. This trend was in place pre-COVID, and then COVID accelerated it all. So I think that the gap between the winners and losers in banking is going to widen. You've heard me say it before. I think some of the best fintech companies in the world are Bank America and JP Morgan, for example, very sophisticated organizations. In other cases, we see other banks adopting many of the digital approaches. They're working hard on their expense base. They're using less branches to make themselves more efficient. So I think that every bank is going to have to figure out where they fit into this. And banks that don't think that they can get there alone, that's another reason for consolidation. And we've seen an acceleration of consolidation recently in the banking industry. And part of the reason is we've got a low revenue growth environment right now, even though we think it's going to change. And banks know that they need to stand up more in terms of digital investment because that is the future. So we research all those companies that you just mentioned. I don't think that technology, that the end story is going to be it disrupted and took away from the bank industry. I think it's going to be some banking industry members decided to join with these fintech companies, and then they both jointly succeeded. And then some banks that don't participate do have a chance of being left behind, in my opinion.
Tom, always appreciate hearing that opinion. Appreciate you joining us as well. Thank you.
Terrific. Great. Thank you.
Shepard Smith here. Thanks for watching CNBC on YouTube.